Hello and welcome to the Forma Models Real Estate Investment with Waterfall Model Walkthrough. This Forma model includes a dynamic catch-up within the waterfall. A catch-up is a legal provision meant to compensate the general partner based on an investment's total return, not just the pre-established hurdle rate. The README tab states the model purpose, highlights common use cases, and provides an overview of functionality, formatting, and all of the unique modules within the model. This tab also provides additional documentation, contact information, and a summary of additional products and services available from Forma Models to support your analysis needs. The Forma starts with user inputs for the real estate purchase price, capital expenditures, as well as closing costs. The loan-to-value is entered next to determine the amount of equity invested as well as loan proceeds. An input is provided for the exit cap rate spread over the acquisition cap rate to determine the disposition sale price. The 5-year forma income statement for the investment is input next. User assumption inputs are provided for revenue items such as rent, other income, as well as vacancy and collection loss. Expense assumption inputs are provided for insurance, property tax, property management fees, and other common real estate expense line items. The net operating income is calculated, which after being reduced by debt service, generates the annual pre-tax net cash flow for the investment before fees. The deal-level unlevered net cash flow, internal rate of return, and multiple of capital is calculated and organized in an easy-to-understand data table. This is followed by similar calculation for the levered net cash flow, internal rate of return, and multiple of capital. The investment structure characteristics are input next, including the preferred rate of return, pro rata return of capital and preferred return, pro rata catch-up, and the promote pro rata share. There is also an input for the general partner investment share in the limited partner. The waterfall begins with a summary of the gross investment level cash flow. This cash flow is utilized to calculate the gross internal rate of return and multiple of capital. The general partner operating fees are deducted from the gross cash flow to determine the net cash flow before promote. This cash flow is utilized to calculate the pre-promote internal rate of return and multiple of capital. The next section of the model calculates the equity capital account balance, including the accrued preferred return. The equity capital account tracking is utilized to determine the cash available beyond the preferred return, starting with the catch-up tier of the waterfall. The next section of the waterfall calculates the catch-up cash flow tier to determine cash available for the promote tier. The pro rata cash flow allocation are consolidated into the limited partner and general partner cash flow, internal rate of return, and multiple of capital. The limited partner returns are broken down into the return of capital, preferred return, catch-up, and promote. The general partner returns are broken down in a similar fashion but also include fee income. Thank you for tuning in. We hope you enjoyed this Forma Models walkthrough and encourage you to visit our website to try the model for yourself.